Hey everybody, it's Jack. Today's Tuesday. I want to show you the biggest problem we face in the market right now. I know a lot of people say, what should I do? Should I buy? Should I sell? This, that. Personally, I'm not selling. I would prefer to sell into strength, not sell into weakness. You may want to write that down and tape it up somewhere. But here's the problem. This is the broad market, S&P 500, tracked by the ETF SPY. Now, here's a normal condition. Over here on the left, we got the short-term trend point on the top, intermediate trend point in the middle, and then down deep, the long-term trend point. Now it's inverted. You see the cross over here to the downside. That was the first sign we're heading bearish. Then it's crossed over against the long-term. That's even more of a bearish sign. Now the short-term trend point is down here below 560. Intermediate and long-term are right here, right around 570. And we got all the way down here to about 480. Now this gap in here has to be filled in going forward. The SPY will trade at prices that fill in this gap going forward. But it's going to run into a ton of resistance right here. So what we could have, and we're seeing it today, is a bullish run in a bearish market, one of the most dangerous situations you can get into. Now, if you're buying in your long-term hold, that's awesome. But to try to take advantage of a bounce in here, very dangerous. This is a hard ceiling right here, and it's moving lower. You also have almost nothing moving higher, and just so many things moving lower. It's ridiculous. I mean, look at the number in here. This is crazy. Crazy sign of weakness. Now, after you get 3 to 5 days in one direction, it's normal for it to bounce the other way and then continue in its downtrend. So it's normal for this to bounce up a little bit and then possibly move a little bit lower. So long term, I'm bullish on the market. I'm always bullish on America. But right now, we're in a bearish stock market, and that's just the case of it. Now, there's still great opportunities selling options, bringing in premium, because this drop right here, this makes the market more volatile than it's ever been. Look back here 6 months. It's never had daily bars with this much price elasticity as it has right here. Now, purple bar day is a lower daily low and a lower daily high, right? You look at this drop right here, just unbelievable. Now, that's an overreaction, okay? Anytime you get this much of an overreaction, you're bound to get a bounce. But this is not the kind of bounce you can buy into too heavily right now, because in order for us to get back to where we can really get long, we're going to have these trend points reverse their order, and we're going to have the SPY close consistently above all three. All right, trade well.